Hey everyone, this is Kirk here again from OptionAlpha.com, and in today's video I want to go through our 7-step trade entry checklist. So after literally hundreds and hundreds of requests over the last couple months, I wanted to put together this 7-step entry checklist that you can use. And believe me, this is not something that was quickly thrown together. So it's not like I just made up 7 things and said, okay, I'm going to throw them into a checklist and then give everyone a PDF. No, this is stuff that you can use in logical and progressional order to go ahead and remove trades that are bad trades quickly and early. So if you can get out of a trade at step 1, great, then you can move on to the next one. So it's meant to help save you time, but it's also meant to make sure that you're getting into the right trades. So again, you can go to optionalpha.com and go ahead and download this if you're a member, and this is free inside of our platform. So here's our 7-step entry checklist. The first thing that we're going to talk about is portfolio fit. And when it comes to portfolio fit, all that you really need to know is, does this trade fit your current portfolio? So do you really need this trade is the question that you should be asking. And I always say, if you've got 10 bullish trades already, maybe you don't need another bullish trade. Maybe you need to look at something that might be a little bit bearish or more neutral, something like that. So first, portfolio fit's a great first question to ask because, again, it eliminates a whole host of different securities and setups out there that don't, again, fit what you're trying to do right now. Number 2 is liquidity. Liquidity is a huge thing for me because if we can't get in and out of something very quickly, what's the point in trading it? Regardless of how good the setup is, a stock has to have amazing liquidity. And so for me, I say that the actual stock needs to have about 100,000 shares traded per day. I mean, that's like the bare minimum. If it's got at least 1 million shares traded, that's even better. And so I definitely would suggest that you focus on stocks that have a lot of underlying activity, and that's just going to make it a more liquid and efficient market. Now, again, we also do provide a watch list for our members on optionalpha.com that you can buy and pay for. It's already pre-screened and pre-scrubbed, and you get lifetime updates because if we ever update a stock or add a stock that goes on or take off a stock that doesn't have great liquidity anymore, that will always be available for you. So this kind of removes this out of the equation. Number 3 is IV percentile. IV percentile is important now because once you've found something that might look like what you fit your portfolio and you know it has great liquidity, now we have to see, okay, what side of implied volatility should you be on? So in the document, we had an example with Apple. If Apple currently has an implied volatility of 45 and an IV percentile of 85, that means that more than 85% of the time over the last year, volatility will generally be lower than it is right now at its actual reading. So there's this big difference between IV percentile and actual implied volatility. We've got more tutorials about that here inside the membership area, but it's important that you're just on the right side of volatility. Is volatility relatively high or relatively low? And that helps you with number 4, which is your option strategy selection. So 4 is based on the implied volatility. Now we can start to narrow down and eliminate strategies that don't work. And I often say that strategy selection is a process of elimination, not selection. And I know it's strategy selection process, but it really is. You got to eliminate the strategies that don't work for that market. So if implied volatility is very high, then you've got to eliminate strategies that don't work in a high implied volatility market, or you have less of an edge. So this would be doing things like trading debit spreads in a high implied volatility market. You're going to overpay for those spreads long term. It's not right to do that type of strategy. You got to eliminate that and look for something else. Number 5, once we've now narrowed down the strategy that we want, we know what side of implied volatility we're going to be on. Now we've got to figure out what strikes and what contract month we want to be dealing with. This is where we actually have the ability with options to pinpoint our chance of success. And you can trade at a 90% level of probability of success, at a 70% probability of success level, whatever level you want to be at. But now is where you start to decide which strike prices and which contract months you go after. Number 6 is position size. So as you can see, as we start to get closer and closer to actually entering a trade, going through strategy selection, selecting the strikes in the contract month, now we have to determine our position size. We generally here have always said that we favor a sliding scale approach to risk anywhere between 1 and 5% of your account balance. And it's going to be different based on how much money you have in your account and what type of return you're targeting each year. But again, we have another guide inside of our membership area here that's a PDF that will help you with determining the proper position size for your account. So go ahead and check that out, again, at optionalpha.com. And number 7 is we've got to consider future moves, or as I say, we always want to be thinking a couple moves ahead. So does this stock have earnings coming up next month? Is it going to go through some sort of stock split? Do they have some sort of major announcement with FDA and some drug approval or something? You got to just think one step ahead. So now that you've gone through, your strategy, your position size, just take 1 second or 30 seconds to just think ahead and say, okay, what might happen and what could I do if that plan B type scenario happens, right? So if it announces earnings, or if some FDA approval comes through or doesn't come through, what am I going to do? And not to say that you have to plan it out in advance completely, but just thinking about it in advance will really help you strategically when you get to that point, because you've already thought about it and it's already in your head. So as always, I hope you guys enjoyed this little checklist and this video that kind of goes along with it, just going through our 7-step entry checklist. Be sure to go ahead and go to optionalpha.com, print this out, put it on your desk, have it there so that you can kind of reference this going back when you start making trades. And as always, if you have any comments or questions, please add it right below in the video comment section below this lesson.